Martin Barnes, Chief Economist, BCA Research. Great to see you once again at Camp Kotok in Maine.
Nice to see you.
You've been spending a lot of time thinking about monetary policy, not surprising given your job, but
Yeah.
you actually think that we kind of obsess about it a little bit too much. What do you mean by that?
You know, people are parsing every nuance of every Fed speech and acting as if the timing of a rate hike, whether it's September or December, is the most important thing that's going to affect the markets. And I think at this point, whether they raise rates in September or December, it's not that big a deal. The sort of issues that we should be more concerned about in the economy are nothing to do with what monetary policy, issues like inequality, productivity, of course, globalization. These are outside the remit of monetary policy, and at this point, I think the Fed probably should raise rates in September. I don't think it's going to be a catastrophic mistake. If they do that, they should just get it over with. There's a sort of sense out there that the Fed is captive to the markets, and that the markets almost are driving Fed policy, and that's a very dangerous position for the Fed to be in, and I think they have to disabuse the markets of that notion. And the way to do that is just to raise rates, and even if the markets sell off, so what?
You know what worries me though is I've heard from people today that the new president can't do much to control the economy. I'm hearing from you now that the Fed is limited in terms of some of these economic issues, whether it's globalization or something else. Who then can control the economy?
Well, the economy doesn't normally need controlled. I mean, you should just let it do its thing, and policy needs to act when you're in a recession and when there's obviously rising unemployment, rising bankruptcies. Then you want policymakers to step in, ease, and try and get things going again. Or at the other extreme, if the economy is overheating, inflation's a huge problem, then you want them to step in to try and cool things down. We're not really in either of these positions at the moment. The economy's chugging along. Yeah, it's not great, 2% growth rate, but that's what you would expect it to be. That's its trend growth rate. There's still a lot of structural overhangs. Just let it go. Let it do its thing. You don't need a lot of policy intervention, in the US at least. Europe's another matter, but I don't think we need a lot of policy activism in the US. There's a case for infrastructure spending. Everybody makes that point. That's a no-brainer. But that's not really going to change the path of the economy. That's just something that should be done.
What about what we're seeing outside of the US? Very aggressive moves by Japan. We certainly saw the Bank of England recently making a move. ECB, we know, has been very aggressive. Does that make sense to you, the level of aggression that we're seeing?
So, Bank of England, yes, because as I said, if you're in recession, that's when policy should do something. And following the Brexit vote, the UK is headed into recession, so it's quite appropriate to ease. Japan, Japan's problems cannot be anything to do with the level of interest rates. Interest rates have been zero for years, bond yields are very low, it's got a falling population. It's not clear to me that further monetary ease is going to change anything in Japan. Its underlying growth rate is very, very low. They can do some certain things with fiscal policy, but monetary policy is not the solution to low growth at this point. Interest rates are very low and cannot be an obstacle to anything. If a business is not investing today, whether it's in Europe or Japan or America, I don't believe it's because the cost of borrowing is too high, and if only interest rates were lower, we would build that plant. That cannot be the reason.
What is the reason then? Why aren't we seeing a big pickup in business investment? Because that's what we need to see.
Yes, it is what we need to see, and if you were a businessman, let me ask you the question, would you feel that this is a great time to be aggressive in building new factories?
Well, if I had to borrow, well, that's true.
You've got political uncertainty domestically in the US, you've got global uncertainty in terms of what's going on in Europe and worries about China. Every time you open the papers, you're reading about problems. And this is on top of a feeling that is a legacy of the downturn, that that downturn was severe, it came as a surprise, and businesses, I think, have been very focused ever since then on making sure that they will not leave themselves vulnerable in the event of another downturn. So focus on being financially strong, building balance sheet strength, trying to keep profit margins up, keeping your costs down, rather than being aggressive and going for growth. Hunker down and make yourself financially strong to weather what might be another shock down the road, and there's a kind of self-reinforcing caution, I think, pretty much everywhere.
As an outsider from the U.S., what do you make of the election cycle here and how much risk potentially there is?
Oh, dangerous territory for a foreigner to be commenting on, but all I can tell you is that if I can speak for all foreigners, we are looking in this US election with a mixture of amusement and horror. And obviously it's hard from trying to be an objective policy point of view to like either of your candidates. And
is there a
Trump I find quite scary at the thought he might be president.
Can he mess up the economy if he becomes president?
Well, people rely on the wonderful checks and balances of the American political system to prevent presidents from doing too much damage. But he does have quite a lot of power on trade. So the president doesn't need congressional approval to shut down trade deals. So he's talked about, ending NAFTA. I think that would be a big mistake. So he can do damage that way. If there's anything that requires legislation through Congress, one would hope that the sensible voices in Congress would not pass any crazy stuff. So it's limited to some extent, but then you've got a confidence issue. If there's not a lot of, back to the point that you raised, business confidence, if one of the issues that's holding us back, if you like, is the lack of animal spirits in the corporate sector, if Trump is seen as a potential source of instability, that's going to be another reason for businesses to hold back. Now, on a positive note, there is talk of, I guess, from Trump on tax reform. That's much needed. Maybe he would do that. Both Clinton and Trump talk about the need for more infrastructure spending. That would be good. So it's not all bad news. I don't see it as being a disaster. The reasons to be concerned maybe go beyond economic policy, more in the foreign policy arena, I would say, is what concerns most foreigners.
Martin Barnes, it's been great chatting with you.
Thank you
so
much.